out to LA with it. I like getting money, I got time to get it. Target on me, so my car's a tinted. Dancing with the devil, I don't bargain with it. Bobbing in the dash, and the stick is with it. And I hit the 4-5 on the west side. But I'm from the east side, this how we slide. This how we ride, yeah,
what's good, guys? Can you hear me? What's sound check like? How we doing? Yo, what's good? What's good? I had to come on a little bit sooner than expected, guys, because the moves are quite chaotic. And we just need to put things into perspective. What's going on? How we doing? Just waiting for a few people to come in. All right, okay then. So, who we got in the room? Okay. Let's have a look. When yacht, you know. I hesitate to show that move, but all my analysis told me it was coming. Sad days. It's not a problem, bro. It's not a problem. When you're trading smaller time frames and you expose yourself to a lot of opportunities, naturally you're going to get things wrong. And you have to be okay with that. David, I ain't going to give you that hey ya. Sorry, bro. Yeah, I'm just waiting for a few people to come through. How we doing this morning anyway, man? Or this afternoon? New York, New York. That's it. Sack Trades, what's good, man? Yeah, Jackson Hole. Yeah, I know. It's just range-like behavior. It's just quick moves. Look what happened yesterday. How we had the stop hunt rise out of New York. And it sort of happened right here as well. Just wait for a few more people to come in. How we doing? Yo, man, what's good? What's good? What's good? What's happening, Sydney? Tony from Sydney, what's good, mate? Shout out to Harry. Yes, the market can go below the low of the ADR. It can go below it, but the principle behind the ADR is that if they do hit the ADR, then we would naturally expect that point in the chart for price to reverse from. Okay, because they would have exceeded the range that they would normally trade on a day-to-day basis. Okay. So yeah, okay, I'm waiting for a couple of more people to come in because I've shared it over to the patrons and to the Discord. All right, so I'm just going to sit and wait for a little bit. I'll tell you what, let's get with it just so that we can understand what's going on. All right. So, if you are new to the channel, be sure to like and subscribe. You know the routine, guys. My name is Tino. Welcome to Traders Reality. Let's have a conversation. So, the story so far, okay? If you were watching yesterday's stream, we were waiting to see if this move by Bitcoin was solidified and it was going to continue to the upside. Now, this is on the 4-hour time frame, dropped down to the hourly, and you can see how everything last night was showing signs that it was going to break down. Why? Because the moving averages weren't giving us what we wanted. The 5 and the 13 EMA. Yes, the 5 EMA crossed over to the 50 EMA and it crossed over above the 13 EMA. That's fine. But we want the 13 EMA to cross over the 50 EMA and expand out. We didn't get that. Okay? We did not get that confirmation by the 13 EMA. So by the failure of the 13 EMA, all you would then be waiting for is the 13 EMA to come back down. And that's exactly what had happened. And they came back and recovered this previous pool of liquidity right here. Okay, so we can mark off that pool of liquidity. They brought it straight back down to that zone. Now, look at what's going on right here. They've effectively initiated a stop hunt low and a rise. Okay, drop down to the lower time frames. Look what's going on. Look at that. Patrons, I know you're in here. Look what's going on. The zone that we were all waiting for. They initiated a stop hunt low, spike, and then moved back up. They came down towards this previous pool of liquidity, didn't touch it holistically. Let's drop down to the 15 to see where they actually came to. It was this zone right here, 46,401. Let's pull it off. That would be the full vector recovery of that zone. Drop across. Look at that. Tap that liquidity and shifted back up again. Green vector candle. A very, very strong move to the upside. We're going to see if this is going to hold. Because as long as it tries and breaks above the 50 EMA, that's good news. If it fails to break above the 50 EMA, all right, the next candle is what we're going to want to see push price higher. That is what we're wanting Bitcoin to do right now, okay? If we do get that failure, then we will know where we stand with this move, okay? Because by principle, it looks like we've got ourselves an M formation, drop level 1, drop down level 2, okay? Now we've worked a level 3 zone and we could be coming into a peak formation. Yeah? Jesse, how you doing? Nice, mad love to you, Jesse, man. Thank you very much, brother. Thank you so much. You're going to stop saying... Listen. The way I need to bring it here, okay, is we need to understand something. All right. We won't know what will happen next, but all we can do is prepare ourselves for it. You've just witnessed a stop hunt low rise. Red candle, green candle formation. All right. You've witnessed it there and then. When you see this sort of behavior happening all the time, you can gauge as to what they're planning on doing next with the zones. Okay. Now, dropping onto the 1 hour time frame, we have got this wonderful red vector candle in sight. Now, we ideally want this candle right here to close stronger. We've got 30 more minutes until New York opens, and we've already witnessed the vector candle stepping in. Usually, the vectors tend to appear halfway through, or should I say, 2/3 of the way into finalizing that candle. All right, so the last 15 minutes of a vector is where we normally see it, okay, on the 1 hour time frame. Right now, we've already had the vector come into play. And we're only half an hour into the hour. So we've got a long time for this candle to really show us its strength. Naturally, if it comes up to this point right here, this will be the recovery of the red vector candle. That will be 50%. Now, if you look at what happened yesterday, all right, when they did the same thing to Ethereum. Look at this. Where are we at with Ethereum? There we go. So yesterday, Ethereum did the following. So we dropped down to the lower time frames, all right? And you'll see it right here. Look at this. This small zone right here with Ethereum. They brought price back up to the moving average, recovered 50% of this vector. And then at that point, they decided to reverse it, initiate a stop hunt low, rise back up, came down and done exactly the same thing in the US Brink session, stop hunt low, vector candle, stopping volume, stayed within the previous peak and shifted out of the zone. Happy days. Okay. Shark fin on the 5 EMA. 13 EMA showing the same thing as well. Coming up into the 50 EMA, crossing over for the short-term trader. That would have been a fantastic entry point because the green vector candle closed above the 50 EMA and the 5 and the 13 EMA. All that is left for you to do is pay to play. That's it. As I said, you can only do one of two things. You can either place a trade and it's wrong or place the trade and it's right. That's it. Sorry, and it works out in your favor, sorry. You're either in profit or not. That's all the outcome there is to it, okay? Having a look at what they're doing right now, Ethereum, look, that is a perfect W formation, all right? Now, although price spiked below the previous peak, the previous peak of the first leg, yes, would that invalidate it? No, because they came straight back into the zone, okay? This was a fake out, a stop hunt low, shift out of the zone. All right. And they've pretty much finalized the zone. Now we want to wait and see if they are going to hold these gains. Okay. Because New York will start in 30 minutes time. We want to know if this is the truth, if this is the basis of the move to the upside. All right. Flipping over to Bitcoin. Look, starting to pull back now. Okay. We're just going to wait and see this fake move, man. It's fake move. One of two things can happen though, guys. They can bring it back to the moving average and they can continue lower and start tapping this pool of liquidity down here. All right, that would be a valid assumption. But it looks like they've tried to take it already, brought price down into that zone and snapped back up again. Let me just look clearly. They actually tapped it. They tapped that point because they literally came to the bottom of this. So let me just mark off on the chart where that actual candle wick finished. So right there, look left. Look at that, man. They tapped that pool right there. They started to open it right there. Unbelievable. They cleared that zone as well. And if you look closely, this candlestick right here had recovered some of the vector already. Okay. So then when you mark it up against here, you can see that price came across and actually tapped that zone and this zone and pulled straight back up. Now, with the indecision going across the market right now, if price does come back and recover this whole vector candle, that will be in an unfortunate situation. Okay, but ideally I am expecting it to pull back ever so slightly and then continue back up and use the start of the next hour to move price back up again. Okay, how long will this move last for is going to be a different story. This is what we're waiting to see. We want to see the 5 and the 13 EMA on the 15-minute time frame move back up. Okay, to give us the understanding that the development of the move is going to continue higher. At the same time, before we can consider price going higher, we want to see the 50 EMA crossing over the 200 EMA on the 15-minute time frame, which you would understand to be the 13 EMA crossing over the 1 hour. Okay, you saw how aggressive they needed to move out of the zone in order to achieve that. Okay, but you can see right here that the 13 EMA right there did not cross over the 50 EMA completely. It stalled at this point in the Asian session. Okay. So let me have a look at your comments. XRP, here we go. Same story with XRP, look. Massive stopping volume candle on XRP. All right, look what they did. They came down and tested this previous zone, stayed within the previous peak. Okay, I have this pool of liquidity right here. So they could come back down. You know, we always have to accept that that could be the case. Okay, but we've already had a pullback away from the 50 EMA and they've already moved lower and they're trying to bring it back up again. So we've got to be careful. All right, this too shall pass. Here we go. Our buying and selling pressure doesn't have anything on the size of their roles. Retail liquidity only facilitates big money intentions and larger movements. They are in complete control. That is completely true because our money cannot be realized in the market if there is no liquidity behind that. Where are we going to get our profit from? We need to have money, okay, matched against our money so that when we realize a return on our investment, the liquidity that we take is the liquidity against the contract that's been matched against us. Okay, so this is how it in essence would work like this. You coming to a platform, you place a trade. That trade gets pinged straight over to the market maker in his pools of liquidity. The amount of money that you put down, lined with the leverage and whatever else that you're using, okay, gets matched to the market maker. The liquidity gets matched to you. Now, the market maker receives a commission off simply that transaction. Now, he's using his liquidity against yours in the anticipation that you hit a liquidation point, all right? But if you do pay yourself, you're taking the money that he's given you, okay? But this is why you see so many liquidation points appear in the charts. Like, what's that? Look at this, V3. V3 aggregate, where is it? There you go. Just wait for this to load up. See what happens on this chart. Here you go, look. Look at what's happened down here. All the shorts got liquidated. All right? Because everybody went short. Everyone will go short at the wrong point. That's how they create the liquidity. They tap that liquidity, release the guys who are on margin, on leverage and what have you, and smack price back up again. All right, that's how they pull their liquidity. That's how they mark up their longs. Someone went short down here. That's really unfortunate for them. They went short. Market maker moved price down lower, tap the previous pools of liquidity that we can see on this chart right here. Where is it? On this chart, let me just roll it out for you again. There it is. On this chart right here. They hit that zone, they could see the dead money, and then they released their intentions to the upside. Because remember, the market maker goes long when price is dropping. Okay, so now he's moved price back up to try and free that liquidity. Principal would say that this is the zone that we expect Bitcoin to come back up to. Okay, now if it does come back up, happy days. What we need to try and prepare ourselves for is how far will they move back up. All right, remember, we've still got another 25 minutes until the hour's over. All right, as long as this candlestick stays positive and aims to continue higher, then price should finish up in this zone. Okay, looking across the board, there is nothing outperforming anything other than all the coins that are against Bitcoin, and that's it, just all the coins against Bitcoin. So look at Ethereum, Bitcoin. All right, she's holding her gains. All right, she's starting to pull back a little bit. Binance, BNB, and Bitcoin making moves to the upside. Ideally, we want to see that there is a good sign. They've already recovered the vector candle, the red vector candle right here. We've got notable volume coming in at the highs. Okay, so by principle, we should expect, as you can see, mini head and shoulders formation. One up there, one there, and one here. But also, we could be doing a bigger pattern. There could be the head and shoulders. So the shoulder starts here. We are right now at the head. That should take us over here to the formation of the shoulder. That could be the case. So what we do is we mark off our zones and we prepare ourselves and we wait. That's the nature of the game. If they do break down price, then naturally we should see the first pool of liquidity right here. Once that pool is achieved, we'll see a drop, retrace, continuation to the downside. Is there anything in this zone right here? So we're going to drop down a time frame, see if there is anything. We can see that we've got no vector candle. Well, there's a stopping volume candle right there, but there's nothing else inside other than this candle right here. So we've got a pool of liquidity right there. Move out again. We can clearly see there's more liquidity down here as well. So those are our zones. That's on the basis that this zone right here actually breaks down. Okay? Because that's all we have to work with in this area. Yeah? Ada Bitcoin. Look what she's doing. She's actually now dropping. She's coming back down to recover this pool of liquidity. Look at that. It's crazy, isn't it? How, in hindsight, we always end up seeing the candlesticks getting fully recovered. All right? Here we are where we are right now. There you go. That's the retrace we are expecting. We are expecting this. We've just had a big influx of money come into the market. Of course, we're going to see a retrace. Dopamine hitter. Oh my days. I'm just reading your comments right now. What's my man talking about useless info? Get him out of here, man. Healthy market always corrects, but in which way? Well, this is the name of the game, my friend. PC Shed, how you doing? Yes. Gala, let's have a look at Gala. Let's have a look at Gala. Let's see what Gala's saying. Is it available like that? No. Okay, let's have a look at what they're saying. Gala. Here you go. I'm guessing that's correct. Gala, Galaxy Entertainment. There you go. Big move. Nice big move. Is that right? Is that right? No. That's stock, man. Here we are. That makes more sense. There we go. Nice little movement by Gala right there. Happy days. Slowly trickling upwards. What's the gains for this? Not seeing it. Shoot. Let me just add it to the watch list. Yeah, how do I add it to the watch list? Can I do that? Yeah, there you go. Happy days. Should be up there now. No? Man, I'm still struggling to work out this bloody platform. Okay, Bitcoin, there we go. Let's have a look. Still coming down. Not an ideal scenario. All right, let's have a look here. Floret, how you doing? Seems like these big moves have been happening around the past 2 hours. Glad I set my alarm clock. Fair enough. Okay. I'm just looking at all your comments here. All right. Yes, they are playing with us. Potato TV. How do we know more money coming into the market total? We'll never know what the total is Okay, all we can do is go by the market maker. We know at some point when you see this sort of behavior, when price spikes lower and comes straight back up, it's because they're taking advantage of liquidity. Just look at this chart right here. On the premise that this is the liquidation points of traders, okay, you can see that they just took out all the guys who went short. All right, they took all the guys who went out short, and involved in there as well are guys who have previously gone long as well. Okay, so they took out those guys' liquidation points as well. So you've got to be careful. These are the tricky zones, ladies and gentlemen. This is the manipulation. Okay. How can you see that price spikes down lower, induces traders to go lower, and then they instantaneously reverse price back up? Okay. Let's just have a look at C98. Someone wants me to have a look at that. Here we go. That is exactly what we are looking for right now. Look at that. Beautiful W formation, hits the criteria right there. We're waiting for the 5 and the 13 EMA to go higher. At the same time, we want the 50 EMA to expand further up away from the 200 EMA, which would then solidify the 1 hour 13 EMA crossing over and moving away from the 50 EMA. That is what we want, ladies and gentlemen. We want that sort of behavior to come into play. Classic W formation. Okay. Yep, Luke Skywalker, how you doing, man? That is it. You know? Crypto Bud, how you doing, man? Mad love from Thailand, man. Thank you so much. Thoughts on the bigger time frame? Here we go. Let's have a look at the bigger time frame. So, right, let me just bring up MT4 on the bigger time frame. Okay, so last night's stream, these were the pools of liquidity that we were expecting Bitcoin to take out, and they've done exactly just that. They tapped this zone. Okay, look at that pool of liquidity right there. They tapped the zone, which is exactly the same on TradingView as well. Now, in terms of the higher time frames, this is what we need to consider. All right, drop onto the 4 hourly. We have broken the 50 EMA on the 4 hour time frame. All right. Very important. Let me get rid of these lines here so you guys can see clearly what is going on. So the 50 EMA on the 4 hour has been broken. It's consistent with their move to the upside. Okay, because if we zoom out, all right, and look at the following: rise level 1, rise level 2, rise level 3. Okay, but they brought it back into the fray. So what we need to wait and see is if they do actually decide to move price higher. Okay, it needs to bounce from this range daily low that we've just tapped. Okay, needs to try and come back up. Then if we are in a peak formation, all right, price may make another attempt to the upside in this zone right here. And they may even pull back from that point and form what we understand to be the true retrace back down, which will, on the daily time frame, will take us down towards the 50 EMA. Right? This is a very sharp move down, especially on the daily. It's working right now, the 13 EMA on the 1 hour on the daily time frame, which is the 50 EMA on the 4 hourly. Where is it? There it is right there. 50 EMA on the 4 hourly. So we're just waiting to see their intention. We're waiting to see if they do have purpose in this zone. Okay. Okay then, cool. Looking at this, Tina, what do you mean by pool of liquidity? You don't understand. Okay, so a pool of liquidity, right? The best way for me to explain to you what a pool of liquidity is look at this green vector candle right here. Now this vector candle, all right, is a candlestick that appears, which gives us the understanding that something is happening behind this candle. Now, the key with these vector candles is we understand them to be the times that price changes in this zone. It's based on tick volume. It's how much interest is found in this area. It's not about the amount of contracts that have been brought. It's about how many times price changes hands in this zone. Okay. Now, the information that we can get from this candle is it can tell us that market makers are either building shorts, okay, and closing longs, or closing longs and building shorts. All right. So we understand the red vector candle right here to be a pool of liquidity because that is where the market maker previously went long. Remember, he builds his positions as price is dropping. He builds his longs at a lower point, right? And he builds his shorts at a higher point, so that when he releases them, after he's trapped the retail trader to believe price is going to continue higher, he's getting ready to offload those orders against the liquidity that these guys have been putting down in terms of liquidations and stop losses. Sorry, okay, that's how he releases it. Look at this chart. Just look at how the liquidation points appear at the point where the market maker needs it so that he can reverse price back up. Just go through the chart and have a look. Liquidation points. That's where guys went long, okay? And they smack price back down. Look at the liquidation points above it, all right? Guys who went short, they reverse price back up, hit the liquidation points. You know? That's the basis of it. That's how they move liquidity in and around the charts. And that is what we call a liquidity pool in the chart. That there, vector candle, liquidity pool. It's a point where they could realize a return on their investment. So now price is coming back down. We've got 10 more minutes until the next hour, okay? Now they could bring price down, and we have actually got ourselves a very, very interesting candle right here. We would understand it to be stopping volume in this zone, all right? This is what we're waiting to see. Mad love from Colombia. How you doing, bro? Thank you so much. Keeping an eye on link. Building a position. Okay. John Smith. So the red are longs and the blues are the shorts. No. Well, yeah, by principle, yes. The red are what we understand the market makers building longs and closing shorts. Okay. The blues and the greens are effectively the market makers going short, but at the same time closing longs. Okay. Are market makers super secretive? Because wouldn't it be easy for big guys to know who they are and exactly enter or trade along them beforehand? No, because the big guys will always have to go to the market makers with the money. Remember, the market makers are the liquidity. This is their business model. This is their business. You want to start dumping big money into the markets, you go to a liquidity provider and you say to them, can you put this money in the market for me? They'll say, yeah, no problem. We charge X amount for this job and this job. You say, thank you very much. At the same time, what they do with their money is they take it and then they put it into the market and match your orders against theirs and take profits off yours against your liquidity and exposure. Okay? That is how it works. You can't actually move the market. You would need so much money. You would need to have more money than the market maker to move the market. Do you understand that? So much more. Can we see, Derek, can we see from other charts where they make more money on liquidating shorts or longs? It's not about other charts. In what? In terms of correlation. So it's how could you see that? I don't think you could ever see that, because what you're saying is can you actually get access to the market maker's playbook as such? You're looking at their order book. Their order book is a reflection of how the candlesticks print. And our goal is to try and exploit that and understand that if they're going to bring price back down to the moving averages or to vector candles, just look at what's happened in the last two sessions, guys. Go watch yesterday's stream at 2 p.m. and last night's stream at 10 p.m. We are discussing what has happened in this zone before it happened, and then look what's happened afterwards. They start dropping price. They drop price one more time. US brink session moves price back up. They realized the profit on their longs from this candle right here. They shifted out of the zone. They built shorts at the same time, marked price higher, 3 pins to the high. Things start to change in Tokyo. Moving averages aren't going higher. Things start to drop. Bang, they've built their longs. They've realized profits on the shorts right here by taking out the guys who went initially long here and hitting their liquidation points and stops. And now we are in this zone again to see if they are going to repeat the same process or continue lower. That's what we're looking for. No. Market maker is not like the owner of Bybit. No. Remember, Bybit goes to the market maker with orders. Now, remember, this happens at such speed. They're all working off servers. Okay? It's just price feeds. Bybit pings an order over to them. They match the liquidity back to Bybit. Bybit fulfills the order on your screen, charges you a commission for a limit or a market order. Done. Now, they're doing that thousands and thousands and thousands of times. Okay. The Frogs B. How you doing, man? Does the market maker have an office or of people? Is it some dude at his house? Crypto Face seems to think he can add money to the market and be a market maker. All right, let me put things into perspective. Okay. In Forex, right, in order to move price by 1 pip, you need to open a trade with 10,000 lots. Do you understand how much money that is? 10,000 lots. That's a lot of money. So when one lot is 100,000 contracts, do the math. Okay? I ain't going to sit and try and work that out. Okay? You can't move. No one individual can move the market. The only market that can be moved is the market makers moving the market. That's it. It's their business. Okay? They are liquidity providers. They are no different to a bookies. All right? Remember, people come to the market to trade with money. You got to ask yourself this question. You can put £1 million into the market. The only way your order can be fulfilled is someone matches your order. It's the market maker. Yeah? Because it's a single transaction. Do you understand? Meaning Binance is not a market maker. No, Binance is not a market maker. On their own platform, okay, on their own platform, they can do whatever they want. They can change price about. They can do whatever, okay, based on the liquidity that's coming in. Remember, you guys are servicing that. Okay? The bookies of crypto. How do you become a market maker? Well, get a bag of money, all right? Go to an exchange and say that you'd like to be a market maker. They'll say, okay, we process around $500-600 million worth of transactions a day. What's your bag like? You turn around and you're looking at your little bag thinking, right, my $10 million right here ain't going to do much, is it? And they'll just say to you, okay, just go and pass, mate. Just stick to day trading, bro. Off you go. Go get your friends and family and, you know, just open a couple accounts for them and trade for them. You know, you ain't got time to be a market maker. All right? That's how it works. All right? Now, you need more money than every exchange. There you go. I need a market maker story. Oh, God. To study market makers, watch penny stocks, market makers in super slow motion. I would understand. I would agree with that. I'm waiting for the 2 o'clock. That's why I'm not talking much about price right now. I'm waiting for 2 o'clock to turn because 2 o'clock is going to tell me exactly what the market makers have in store. No, Elon Musk can't be a market maker. He can't be a market maker. It wouldn't pay him to be a market maker. Well, he could if he was to take all of his wealth. You've got to understand, market makers are liquid, not assets. Liquid. They've probably got assets, but they are liquid. Remember, when you put an order in, it's matched somewhere else. Okay? That's how it works. Yes, John Smith, if you go into the playlist, Understanding the Hybrid, and there is also another playlist in there on how to, it will show you how to install it. Okay? The Paracrafter, how you doing? Okay, so if market makers send price to 30k again, isn't that scaring the retail traders, investors away? Isn't it better to send it to 100k so everyone makes money? I feel like the market makers are not nice. Well, look, it doesn't matter what price Bitcoin is at. Why? Because everyone has a different conception of value. Okay? Traders, in essence, shouldn't really care about the price of Bitcoin, other than what price was it that you entered in and what price did you get out at. But there are people who are fixated on value. They think Bitcoin should go back down to 30k. Bitcoin will go all the way up to 150k and they'll say, yeah, Bitcoin needs to come down to 30k to make it more interesting for people. Is it not been interesting enough for you, the fact that it's gone all the way to 150k? Why is it not more interesting at 90K? Because that's exactly where we're going to be going. We're going to be getting to a point in cryptocurrency where the 30K and the 46 zone where we are right now is laughable. Okay, here's an example. All right, watch this. So say you have got, let's look at a recently listed one. Okay. All right, look at Algo. No, let's look at Alf, actually. XTZ. Watch this. My hypothesis is this, okay? Where we are right now, okay, is here for Bitcoin. That is where we are. Now, everything around this point right here in the chart for Bitcoin, I know this is XTZ, but I'm just saying, hypothetically, this is where we are with Bitcoin, okay? Everyone's like, oh, it needs to come back down to 0.7 for it to be deemed as a lucrative investment for people to get their money back in. No one's going to be buying when it's at this point, okay? Well, when it starts to stabilize and you can see that this zone right here is actually holding, you're now saying that this zone is actually the point where price needs to get to, considering now it's gone to 193, for example. Then all you're seeing is Bitcoin just going up and down, and before you know it, Bitcoin ends up going up to monstrous price values, for example, okay? And are people even thinking or talking about this point in the chart anymore, where they conceived value to be? In other words, value there is no static point of value in Bitcoin. The value is based on what people are prepared to pay for it, all right? And that number is infinite. Now, that's not me saying Bitcoin can continue all the way to the moon. That will be a great thing for people. Don't get me wrong. A lot of people would enjoy that. But what I'm trying to say to you is to help you understand that regardless of whatever price is, it doesn't matter, okay? You can't be fixated on one bias of price. Right now, Bitcoin is priced at $46,956. If it's too much for you, you're going to have to wait and see. But the problem that you got is if it continues higher, 46,900 is a little bit more of a better option rather than 51,600. You're always going to be put to the test. No one will ever know exactly what point is it right to buy Bitcoin for fair value. You're always going to get someone, you say, I brought Bitcoin at 46. You'll get that guy that say, I brought it at 11. Then you're going to get the guy that said he got it free in a little spin at an amusement park, for example. You know, and he picked it up at 0.01. Like, come on. You're never going to be able to match it. That's the basis of it, man. Yes, if you're a true holder as well, price does not matter. As a holder, you are expecting great things. You are invested. Okay, here we go. Start of New York, ladies and gentlemen. 2 o'clock on the nose. Let's see if we get a recovery of the wick. Okay, let's see if they have intentions to continue higher. This will make sense for us if this move is consistent with market maker behavior. All right, New York has stepped in. All right, let's see Ethereum moving up. There we go. Ethereum looks like it's trying to move up as well, but we're not out the woods just yet, guys. We are in a rangy zone. Look how aggressive Ethereum's moving up. Let's drop down to the lower time frames. Can we see some notable volume coming in? Here we go. 50% retracement of the vector. Okay, happy days. 5-minute time frame. What can we see? Great. Moving averages are flat across the board. Look, guys, we're in a sticky zone right here. There's nothing much happening. Can't get too excited about this point unless we start breaking above this zone right here. That's what we're waiting for. Okay, and when you don't have enough buyers at 50K, who will buy at 100K? Trust me, Archie, people, this is what I'm trying to say to you. At 100K, you're thinking that Bitcoin, there is no one that's going to buy at 100K. You know? No one would buy Bitcoin at 10K. No one would buy Bitcoin at 20K. No one would buy it at 30. You're getting it's the same pattern, isn't it, my friend? Don't ever think that there's no one getting ready to buy Bitcoin at 100 grand. Because if it can go to 100 grand, the general conception is, well, if it can go there, it can go further. That's how it works. BitBoy says it's crashing, it's over. Each to their own. For me, I have no interest in the longer term of Bitcoin if I'm a short-term day trader. If Bitcoin's going to crash, happy days, we'll short it. All right, we just pull off our levels. We understand where we are in the cycle. Job done. Are we expecting? And the thing is, guys, look, you can effectively open longs, open shorts at this point in the chart. All right. Where is there anything about crashing? Because right now, price is coming back up. So at this point in time, price is reversing. It's going back up. People can capitalize on that. Naturally, if price is dropping, well, we can capitalize on that. It doesn't matter what is being said. It's about what is happening. Okay? You can predict the future and say, I think Bitcoin's going to go all the way down to 20K. And if it doesn't go down to 20K, all the hype about Bitcoin going straight up and up and up, right, takes precedence, and your 20K prediction isn't thought about. All right? This is what I'm trying to say to you. No one should have a bias to price. Don't come to trading with an idea of value. Never make that decision. Okay? If you think price is going to go higher, you place your trade, you do it with diligence, you understand confluences, and you put your money you pay to play. All right? If you think it's going to go lower, you do exactly the same thing. The end result of each of those outcomes is going to reflect whether you made the right decision or not. If you like the decision that you made and it paid you out, try and study why that worked out for you and try and replicate it. If it didn't go in your favor, try and understand why it didn't go in your favor and try and avoid doing it next time, or try and keep it as cheap as possible if it does actually appear again. That's where you need to be with trading, guys. You cannot have a bias with trading. I said it last night. Oxygen, if we could trade it, then granted, I'd be in that market trading it. Give me a price, there'll be a trade. Okay? That's the beauty of trading. Are we all on the same page, ladies and gentlemen? CME gaps. Right, listen, these gaps, everyone is gone crazy about these gaps. Okay? People are assuming that the CME gaps are the same as what they are like in trading stocks and shares, because there's loads of gaps in there as well. Gaps are like exhaustions of price, orders being filled and not filling in the price. Naturally, we believe that price is going to come back and fill those zones. Okay? That might not be the case all the time. Okay? All FUD. Oh man, look, man, the thing is, right, it's each whatever YouTuber out there, everyone has their has a different conception against cryptocurrency. All right, BitBoy Crypto, he has one standing on cryptocurrency. Okay, and then you've got other crypto channels that have a different stance. Usually they're all talking about the same thing, but they're making it on the basis of what price is doing right now. And in fairness, all they can go by is what's going on now. All right? But be careful. Just because of what we see right now doesn't mean that it's going to mean that price is going to drop or it's going to rise. All we have is the now. Okay? Because when price comes back up to this point right here in the chart, okay? Look at it like this. When price comes back up into this zone, let me just clear my chart up, man. When price comes back into this zone right here at the 48K, all right? Well, many people aren't talking about a crash. They're talking about going to the moon. Because at this same point over here, that is when people were talking about going to the moon. And then we saw this move to the upside and everyone's like, yeah, man, it is going to the moon. And then it starts to break down. Right. Cryptocurrency is now crashing. All right. Be careful with how you translate price. At the end of the day, these are cyclical patterns. They move price in a certain way to induce people to step in, step out, commit money. You got Bitcoin being purchased on the over-the-counters market non-stop. All right? The OTC isn't reflected in price. Okay? You don't see it in the markets. It's the over-the-trade counter. All right? It's a different game. I'm just looking at your comments right now. There's a bit of FUD. Gear shift. Okay. David, wouldn't they clear out lower pools of liquidity if they're not coming back to these lower levels again? Great. So, previous pools of liquidity that look like that they haven't taken just yet. Okay, well, let's just look at it like this. All right. Drop onto the daily time frame. All right. We look left. As it stands right now, we've got this pool of liquidity up here that they are trying to take in, which is the 52-54 zone. Ideally, that's where I would like Bitcoin to end up at. Okay. Before it can end up in that direction, all right, Bitcoin needs to come back down. We need to test the 50 EMA on the higher time frame. Because look, we've got this pool of liquidity right here that they may need to try and tap. They've already tapped it once. Just look. There it is right there. They've come down into that zone. Okay. Now, naturally, we could expect them to bring price all the way down to here and bounce away from that point. By that time, the 50 EMA would have moved higher. Now, what about other vector candles in the chart that they haven't recovered? What about this zone right here? Okay. Well, who's to say that they're not going to come back to it? It's just a matter of when. So just look at this. Bitcoin beforehand, when it made its move to the upside, when it hit the high of 65, 64, 65, yeah. Okay. Within all of this zone right here, there were vector candles. Look at this. Here we are. Move out. Look at that zone right there. Vector candle. All the way down. Vector candle complete. Even down to this little pool of liquidity. Vector candle right here. Now, naturally, we've got pools of liquidity down here. But what the market maker likes to do is this. If he thinks that he's going to be losing money on this trade right here, he'll just double down up here. They can do that. You see, you've got to understand as well, the market maker can be wrong for as long as he wants because it's his money he's putting up. It doesn't affect him. Okay? Here we go. Look at this behavior. Nice little movement. Let's have a look on the trading view. What have we got here? Nice retrace back up. New York is now stepping into play. We're going to see the retrace of this wick, which will be aligned with the 50% retracement of the vector candle. Could we actually see? Look what happened yesterday, guys, right? Just look. Yesterday, okay, Ethereum done exactly the same thing. And this is so important. Where is it? In this zone right here. Drop down to the lower time frames and you'll see a pattern right here. Look. Where was it? There it is. So, this W formation right here. Ethereum came up and recovered 50% of the vector candle right here. Okay? They dropped it. Then they shifted back up again. Dropped again. And then made the move. They formed the W formation. Alright? Now look at what Bitcoin's doing. Bitcoin has come all the way back up to this zone right here, dropped it. Now it wants to try and come back up, try and stabilize the zone. Okay, they've recovered 50% of the vector candle and they've moved straight away from it. By principle, we want to see them continue higher. Okay, but all they're doing is just sticking in the zone. Now, if there is any information that's inducing Bitcoin to trade lower, then fine. What is that information? Let's have a look. What information is coming out about cryptocurrency? Okay then, so house prices are a concern. Fed should not be complacent about it. Talking about the Fed, Microsoft is awarded US patent for crypto token creation service. Happy days. Bitcoin's rally from July lows may be running out of steam. What? Because it's pulling back. That's fine. We can deal with that. NFTs, supplement Rolexes and Lambos as the new digital savvy flex. Okay, that's irrelevant. Authorities, lack of cryptocurrency knowledge, hands Swedish drug dealers 2.3 million crime bonus. Okay, fair enough. So it looks like everyone's getting paid. You know? What information is the retail trader looking at from here? Governor Okuwo defends CBN's clampdown on cryptocurrency. Like, what is this? And then you've got banks warn that crypto could replace the dollar within 5 years. Do you understand the impact that is going to have on the marketplace? Gold brought in dollars. Coffee, dollars. Oil, dollars. Silver, dollars. Wheat, dollars. Every commodity market is traded against the dollar. Could you imagine? You've got orange juice futures traded with Bitcoin. Wow. What a story. What an absolute story. You know? It's causing hedge funds to pull money. Okay. Quite an unusual number 13. I hear you, man. Syndicate, hey. Is it possible that Bitcoin is still valid for level 3 rise on the 1 hour from a W on the 19th of August? The W on the 19th of August. Oh, this W. This W here. Well, by principle, right, we've had the cyclical move to the upside. Look at it. Had rise level 1. All right. Rise level 2. Rise level 3. Peak formation. Drop level 1. Drop level 2. Drop level 3. Peak formation. Which is why we're getting this tricky behavior. Look at this movement. Level 1 and level 3 are always a tricky zone to trade, ladies and gentlemen. It is a tricky zone to trade, and that's the truth. There's no hiding from it. It's the hardest zone to establish direction from because they could go in either direction. Okay? That's what we need to keep in our minds. Last 2 Thursdays, we had Gladys. The last 2 Thursdays, we have had green vectors at exactly 1 hour after New York opening on the 1 hour time frame. Take a look. I believe that, man. I believe that. We've got another 15 minutes until the New York futures markets open. Okay? That's exactly what happened yesterday. All right? We had this boring behavior, and then the futures markets open and shifted out the zone. All right? Let's just have a look at something here. Gold has dropped quite... Oh, it hasn't dropped aggressively, so that by that token, dollar yen is now continuing back up. That's happy days, 2 times ADR range daily high, if it does work out. Gold itself, how far did it drop down? Came down to the previous pool of liquidity. Ah, there it is. Completely sapped that pool. Perfect. Stop hunt rise, drop, tap the psychological high, and came back down again. Great move by gold. So dollar yen by that principle should now trade away from the psychological high right there. It came down, tested it, continuation to the upside. Let's see if they hit the range daily high at the same time taking previous pools of liquidity up here. So let's see what happens in that instance. We are going to now roll over and see what the US Brink session is coming into play with. All right, so they're holding this zone. If they do break down lower, they could come and recover this previous vector point. Is this effectively a stop hunt rise? Or were they using this move to induce traders to go lower, commit a massive amount of money to the downside to induce the traders to go short and reverse it back up and hit their liquidations and their stops? Let's see what Bitcoin has in store for us in New York. Range daily low has been taken. We always expect them to pull away from this point in the chart, which will then take us towards this point in the chart right here. And we could even come up to this point by the end of tonight. Okay, that could be an interesting zone because they will be then be coming back up above the 50 and the 200. But look, we have come back down into this pool of liquidity. So we've got this zone and this zone right here. So we've got to be careful. We are expecting Bitcoin at some point to come down and test a key moving average. Okay, and that key moving average on the higher time frames for me, in my opinion, would be the 200 EMA. I would want to see Bitcoin hit the 200 because every time it hits the 200 EMA, you see some big bad boy movements from it. Look at when they tested it there. Look what happened. It moved completely higher from there. Okay, so that's what we really want to see Bitcoin do. Okay, then here we go. What's going on in my chart? Here we are. Happy days. Okay, then. How are we on the rise, ladies and gentlemen? 10 few more minutes before the New York session. September historically has not been a great month, usually drops. Do you think this might start our drop to the M to the downside level 1 and continuation in the 4 hour in a few days? Who knows? All we've got, guys, is what we can see right now. You know? That is all we've got. JB, any correlation between weekly spread and the exact distance between the 50 EMA and the high and any high or low? When you say the weekly spread, are you talking about the spread that is set at the start of the week? What we expect from the New York session open, we are expecting, if they're not dropping price any lower, then we are going to potentially see a retrace. New York is going to respond to this information if they haven't done so already, or they're getting ready to respond to it. Okay, that's what that's what's happening. Yeah, you've already said that, Robert. Okay, let's have a look at what else is actually doing pretty well. Okay. I'm not seeing much. The lowest losers are Cake. Cake sat out, still in its zone, holding the movement. BNB holding its zone. It's all down to New York, guys. This is what we're waiting for. We're waiting to see if New York is going to show commitment to the upside. They came down and spiked straight back up. It's such tricky behavior. AVAX has come back to its previous pool of liquidity. They haven't come back to this point by accident, guys. Why is it price stops at this point? What's the significance of price stopping in that zone? Hasn't hit a moving average, hasn't done anything, okay? Why has it stopped? Ironically, right next to the previous pool of liquidity here and the last time they consolidated before they made a move up. What's causing that? Is that the point where they can induce retail traders to believe that price is going to continue up again? Well, let's look at it like this. They've been marking up their longs from that high. They've been marking longs at lower possible prices. Bring it back to a point where they believe they can induce retail traders to step in again, mark price up, spike it lower, hit the liquidation points, and then use that liquidity to release price further up and get the retail trader back in again, okay, because he believes he's caught the buying the dip. That's the basis of price action, in my opinion. Yeah, so the psychological high and low, my friend, okay? In relation to the 50 EMA, the 50 EMA itself is just a momentum. It tells us where price is likely to go. Now, granted, thousands and thousands of traders rely on the 50 EMA. They say that the 50 and the 200 EMA are the moving averages that banks look at when they're trying to work out direction, all right? Market maker will exploit that, which is why you see price always come back to the 50 EMA, trap the trader to believe that there is a retrace or a buying the dip session. They buy the dip, and then price then comes away from that point. Look at it right here. They buy the dip, price comes away from that point, commits the retail trader to go long, and then he drops it because he's trapped enough liquidity in this zone to believe that price is going to go higher, which means he's now got the liquidity in terms of liquidations and stops to release the money that he's got trapped up here in retail traders' pockets to the downside, okay? Because when they lose, the market maker takes their margin. You know? Death cross on the 1 hour, trap incoming. There you go. So look, here we go. The 1 hour time frame is about to show the 50 EMA crossing over the 200 EMA. All right? Now, there are traders that are waiting for this right now, guys. They are sat waiting for this. Okay? So you've got to be aware of what is happening, because this is where they can trap. Look at how they move price down lower beforehand, induce the cross, get the traders committed, reverse back up. Let's see if that happens today. Let's see. Let's see if that is the truth. Okay. Had a little bit of a sound check issue there. Well, what I did do was I just took my inhaler, as you can probably tell. Come on, New York, man. You're saying I've got to sit here for the next 9 minutes. All right, let's have a look at what you guys are saying. Okay. Not yet. Not just yet. Not just yet. I won't be picking her up yet, but thank you very much for reminding me, because there was an element of time where I actually forgot. 22 Loveland. Just found a channel called Market Makers, and I liked him because They've been trained to like the name. Anyway, he talks about Gartley death pattern. Any thoughts? Higher time frame movement. Yeah, the Gartley and the Gartley death pattern. It's whatever you decide it to be, man. You know, these are 100-year-old patterns that, yeah, they do work out, but naturally price. It's look at the patterns that we see more of. We see W's and we see M's, we see retraces and then continuations, spike up and down. These Gartley patterns, I mean, I'm not discrediting them, but for me, you know, it's not enough in the arsenal, you know, just to rely on the pattern. You know, no discredit to anyone that uses them. I just don't use them. I just look at the patterns that I see normally, which reflect the market maker's business model. Okay? So conventional wisdom of trading will say that this move right here, you can see the wick right there. Conventional candlestick theory would say that that is a point in the chart that the market is rejecting because there's no one showing any interest at that point. Well, that's wrong, because in order for this wick to be achieved, okay, it had to have been a thick candle body in the first place, which means someone was putting orders in that zone. When they snap price back, it's because the orders that people put in that point have got liquidation points. There's points where their margin is accessible because they've put down their stops. So the market maker snaps price back because remember, he's got the liquidity to pump into the market to move it in the direction that he sees fit. So if he knows that he can open up his shorts at this point based on the amount of liquidity that is trapped at this point in the chart, he knows that he's not going to break the market because he's got the liquidity already matched to the downside because he's been marking his shorts at the highs. The retail trader's been buying. He's been committing in his margin here, here, and here, and here. The market maker just needs to move price down lower to release that liquidity, and he does it so fast, and 9 times out of 10 the retail trader is startled by it, and he then looks at the chart to see at what point could he survive or where is it likely to turn. He's leaving his money exposed. He buys the dip, he gets a little bit happy, and then he thinks, I caught the dip, that means I'm the greatest trader alive, I'm going to start adding more money. So market maker marks price up again, brings price towards the liquidity zone right here, and then he spikes it up one more time, solidifies the intention, and then he drops it and completely squashes everyone in this zone. Okay? They don't tell you that in the books. You have to work it out for yourself. That's the sad truth. That is the sad truth. How you doing, Royal Nerve, man? What's good, bro? S&P 500 weekly. I feel like correction can come in September, October. I know weekly is far out. No problem. All right, let's have a look. SPY, let me just bring that up here. No, SP5, what am I doing? SPX, sorry. Okay, then here we go. All right, we've got a gap right here. Likely they'll fill that gap. They always fill the gaps. Just look. Gap. Gap right there. This is for overnight trading. Right? Out of hours trading. Out of hours trading. Okay? Now let's look at the way they're moving price over a week. Wow. Okay then. So, the last time, right? They did this, okay? If you look at 2007, 2008, the subprime mortgage crisis. Just look at that. That's the subprime mortgage crisis. M formation at the highs when they declared that there may be an issue with the subprime mortgage crisis. I remember when they declared that because I was in Cyprus watching Sky News at the time, and I looked at the chart and said, oh, wow, look at that. And then the drop. Price comes all the way down and shows an inverted head and shoulders. Happy days. And then look what happened. It just continuously moves to the upside. Continuously. Look at the resets. Reset. So we're now getting a one more push up. Maybe try and hit the 5,000 mark. What better time to drop it from there? I hope I haven't scared anyone. We're just talking patterns, ladies and gentlemen. At what point, look at it like this, right? When we think, okay, that people should get wrecked, or, you know, traders should get wrecked, everyone's going to get wrecked, or something is going to, you know, something is too much value, it's overextended. Well, until it shows us that it's overextended, we can't say nothing. We have to trade and see as it is. 3 minutes until New York, ladies and gentlemen. 3 minutes. Samir, Tino, I usually get wrecked during the most active sessions. However, I do good in calmer times of the day. What's up with me? Is this a bad thing? No, not at all. You're just not used to volatility. All right? Or you may be exposing too much money during volatile times. Okay? What you want to try and put in your minds is this. Okay? If you can place a trade and go to bed and forget about it, you've probably got the right amount of risk. Okay? Because you won't have the fear of losing money. All right? A market crash would have to happen for you to wipe out your account. That's what I'm trying to say. All right? But 9 times out of 10, traders put down positions and they think that they can manage high leverage positions just because they're in front of the chart. But what they're failing to understand is the moment you put down big money or high leverage, the fluctuations in price push you closer and closer towards your liquidation point, and you are then emotionally managing your trade. The idea is to have no emotions. Now, I can't say to you guys you can't have emotions, but the best way to handle the emotions is to not put yourself in the position to become emotional. That's the only way you can handle emotions. All right? If you can see that there is a dark alley, okay, but you are stood away from that alley, right? If you walk towards it, naturally, you're going to start feeling scared. Guess what? Don't walk towards it, bruv. Stay away from it. You won't start feeling scared. The same thing applies in trading. Don't expose your account to too much leverage. Don't put too much money down when you're trying to understand the strategy. Keep it short and sweet. The idea is to understand the execution, because the result of your success behind your execution of a trade results in money. So why do people come to trading? Because they want to make money. Wrong. You need to come to trading to understand how it works. If you're going to be a surgeon, what you're going to do? Go quickly cut someone up just to see that you've had the experience of cutting someone up with a scalpel trying to replace their heart with their kneecap? Nah. You need to understand the game. You need to do it slowly. And that's what people ain't doing. They want to come into the chart because trading automatically gives you the understanding that you can create wealth at a moment's notice. This is the hardest, easiest way to make money. All right? And Instagram and all the other social media platforms where people flex about trading, people get the wrong end of the stick. You got guys, you know, showcasing their wealth online, and then you've got the average Joe in bed with his dad's slippers on and his missus who's snoring away, and he has to get the bus to work, and he's just seeing a 20-year-old flex that he's made 10 grand in 20 minutes. That makes people do things. That makes them put things into perspective, and they say, you know what, I'm sick of this life. I'm going to go and sell everything. I'm going to quit my job, and I'm going to do it, because if that 20-year-old can do it, so can I. And then that same guy makes the wrong decision. And now he hasn't got his dad's slippers because he had to sell them. That's the harsh truth of things, man. Like, that is the story. I can't put it any other way. You know? He has got his green jumper, though. He has got his green jumper. But no, that's the point. Okay? That is what I'm trying to get you guys to understand. Okay? The get-rich-quick adventurer dies poor. And that's what Jesse Livermore said. Okay? Here you go. Here is a quote for you today. And there's a lot of understanding behind it. Where is it? Here we go. This is my favorite quote right there. The game of speculation is the most uniformly fascinating game in the world, but it's not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. That is the quote. That should put things into perspective for you. Okay? Now, let's have a look at Bitcoin. Where we at? Futures market are now officially open. The US Brinks box is now in full swing. Where are we with that Brinks? Here we are. We should now see some interesting behavior in the Brinks session. Man, MT4, you depressed the life out of me. Here we go. Range daily low has actually been achieved. We want to see price bounce away from this zone. Okay then. Now I ain't going to be on too long because I'm waiting for getting ready to go and get my daughter. But I'm going to sit through this for as long as I can. Okay then. So looking at the chart, the chat. Sorry. What's this? Exposing scam. He and his brother did on their Discord. Yes, it was 100% them. Look at his past scam too, using BitMEX pool. 150k from his father. Oh. Okay, I don't know what that is about. What about the 800 EMA on the 30-minute time frame? Shows nice support. Okay, so the 800 EMA on the 30-minute time frame would be the 200 EMA on the hourly. Okay, if I've got that correct. Not on the hourly, on the 4 hourly. No, it's not. What is it? It's half of that. Multiply that out. So hold on a second. Where are you basing that off? Where is it? Hold on. 30-minute. Where's the 800 EMA? Oh, the 800 EMA right there. Okay then. So that would mean we are on double that. Where are we in lighter moving averages? That must be the 100 EMA. Half of the journey yet. Half of... No. What is that? 800 EMA on the 30-minute time frame. What on earth is that? Why am I not seeing it? Oh, here we are. No, it's not that one. Wow, you've thrown me off there, bro. Oh, but I'm on Bitcoin Perpetual, so it might be different. Hold on a sec. 30-minute time frame. There you go. There it is right there. Bitcoin USDT on the 1 hour time frame. It's actually not anywhere near any other moving average. That's where the 800 EMA is on the 1 hour. So all the way down at 43,000. Here we go. We got some movement. Let's have a look. Come on, Bitcoin. Happy days. Is this the zone? We want to see price come back up to this point right here. Once it hits this zone right here, we could anticipate a retrace, which will test the 5 and the 5 and the 13 EMA. If it does pull back from that point, we should anticipate another move back up and continue, hopefully. But then if price does come up towards the 50 and the 200 EMA on the hourly, that is where we may see resistance. They would have recovered the vector candles, and it's one of two ways. If price is going to continue higher, you want to wait for price to break above the 50 and the 200 EMA, come back and retest that point, and then make a move to the upside. Alternatively, if it comes up to this point and shows a rejection, remember, they can actually spike price above the 200 and the 50 EMA and then break it back down again, throwing everybody off. Okay? So you've just got to be careful. Wait for the clear indication that they are going to go down lower or higher, and we work that out with the moving averages crossing over on the higher time frame, which is the hourly. If you really want to see confirmation of it growing or developing into that move, keep an eye out on the 50 EMA on the 15-minute time frame crossing over the 200 EMA. Once that happens, that would solidify the 13 EMA crossing over the 1 hourly. Of course, once that happens, wait for the retrace continuation to the upside, because this is the pattern that we like to trade. All right? So, other than that, ladies and gentlemen, I hope you have enjoyed today's session. If you are new, be sure to like and subscribe. We will be back again tonight at 10 p.m. I stream 2 times a day, guys. I stream the New York session at 2 p.m. All right. Well, not at 2 p.m. It was about 1:45 today. And I then stream again at 10 p.m. to summarize the day's events. Okay. That is what we are expecting for today. If it does happen, keep an eye out on the previous pools of liquidity. Okay. And for all my Forex guys, okay, just keep an eye out on gold. If she's going to hold in this zone, keep an eye out on dollar yen. She's actually making more moves to the upside. M4 projection point could be a zone that they bring price back to. Let's see what they've got in store for us. Other than that, guys, go and have yourselves a wonderful day. All right. And I will catch up with you all later on tonight. Take care of yourselves. Stay well. Peace.